country's economy is failing to gain traction and contracted by 0.6% between July and September this year. Now, if you take a look at those numbers, we'll see that the South African Reserve Bank had predicted it to, for the year rather, to decline by 0.5%, and this is the same as Treasury as well. So this stirs more concerns. The economy is too weak to change, and the fortunes, unfortunately, of 10 million South Africans that are unemployed will stay out of work. So that expected growth rate for the year to sit at 0.5%. Let's take a look at what our population looks like at the moment. So the growth is at around 1.5%, but the economy is only growing at 0.5%. And this is a very important factor to note when we look at the GDP figures. And then if we take a look at the rest of Africa. So this is interesting because Africa is expected to grow above 2% or 4% if you exclude Nigeria, South Africa and Angola, if you just take a look at that graphic there. And we are seeing that what impacts growth in South Africa is the load shedding, strikes, insufficient investment, weak demand, and that saw the economy shrinking by about 3.1%, you'll remember, in the first quarter of this year, before rebounding to about 3.1% in the second quarter. Now, the danger here, and economists have said this time again, is that our population has been growing almost 3 times faster than our growth rate, and this is a big problem. Lulu Krugel from PwC joins me now to discuss this problem and many other problems in our economy. I mean, I think the first question that I want to pick your brain on is this traditional economics, where you'd see such extremities in growth and no growth? Just in last quarter, 3.1%, albeit off a low base, and now all the way down to 0.6%.
South Africa's economic growth has been extremely volatile, uncharacteristically so. Out of the last 7 quarters, we have had 4 quarters in which the economy contracted, but because they weren't, following on to each other, at least we didn't go into what we as economists call a technical recession. As you rightfully say, that massive rebound we saw in the second quarter was on the back of that contraction in the first quarter. The first quarter, of course, being heavily impacted by load shedding. So I suppose we all weren't expecting, that kind of growth, but at least I was hoping for the numbers to be in the positive, albeit very small. And unfortunately, we saw on a quarter-on-quarter basis that the economy again contracted by 0.6%.
Yeah, in this particular quarter, we didn't see as much load shedding as we saw in the first quarter. So would it be correct to say here that a lot of it would be the slowing global growth having an impact on emerging markets like ours?
Yeah, if you look at the sectors that were mostly impacted by this, it could well be. I mean, it's the growth engines of the economy, the places that need to actually create jobs for people, like manufacturing and mining in particular. But mining has been struggling for years, and it's been very volatile. If you look at the history, maybe over the last 10 or 15 years, actually, it's been very volatile. But it's really unfortunate that manufacturing is suffering so much. And unfortunately, some of our export markets, like the UK, still the Brexit uncertainty, although the economy is not doing too badly. And then, of course, China's slowing growth. Growth this year expected to be the lowest in 20 years in China, and that unfortunately having an impact on South Africa's export of some of our commodities.
Yeah, and that's a big problem, because you'll remember that the National Development Plan spoke about creating 11 million jobs by the year 2030, and of course we need to be growing by about 5.4%.
Yes.
So how do we then turn around these crucial sectors like manufacturing that you've just mentioned to start seeing the kind of growth that the government wants?
Well, interesting that you mentioned Africa earlier and the rest of Africa, and as you mentioned, growth rates in the rest of Africa actually seems reasonably strong, and certain economies like Ghana, like Rwanda, like Kenya, consistently performing and growing at about 4 or 5%. So I think as South Africa we should move our focus in terms of our export markets away from the developed economies and rather look at Africa and other developing markets like India, for example, example, where we've seen, for example, food consumption is expected to grow by as much as 9%. So if we can start exporting to those high growth markets, that could actually be a bit of a boost for the economy. And those sectors are actually ready to do that. It's just a question of government providing policy certainty in certain areas.
Yeah, a final thought from you, Lulu. There are a report that I read from PwC, 14 key indicators that show the health of the economy. And I want you to say this because it was quite scary to find out how many are actually showing some positivity. So maybe just share with our viewers some of those shocking numbers.
Yeah, so unfortunately, if we have had to gauge the heat of the South African economy, if 10 is good and it's growing, then we're probably at the moment at around 2 or 3. And most indicators showing, that there's pressure on the economy. But there's at least one good number that came out today, and that is in terms of gross fixed capital formation, which is basically investment by private sector, and that has grown by 4%. So that for me says that maybe, business confidence has turned around, albeit still very low. Businesses are maybe looking at the future a little bit more positively, and they started to invest in the economy again. So that might pay off in about 6 to 12 months from now.
I suppose the long-term outlook for South Africa might be positive after all. Lulu, thank you very much for that mix.